All right, folks,
Thank
my next guest says that economics is taking a backseat to front page news, which, of course, we know has been an absolute whirlwind. So let's bring in Kingsview Wealth, their management chief investment officer, also Fox Business contributor, Scott Martin. And Scott, you know, we are in a sort of perpetual breaking news mode. By the way, real breaking news, right? We're not just saying it. The news is really breaking at breakneck speed. And it's moving markets. So how do you as a professional deal with this? Because I can tell you right now, most of our viewers are grappling with it.
Yes, it's broken news, Charles. I mean, it's breaking me as a human, as is my earpiece, as you can tell. So bear with me. But Charles, look, the way as a human to deal with it, I guess, too, and the way as an investor to deal with it, is take advantage of the market when it goes a little crazy because of the news that we're receiving. And you mentioned it in your lead-in there to the interview, is like talking about how economic data now that's getting slower, data that's getting less impressive, the Federal Reserve, which is still kind of hanging out there as this kind of man behind the curtain, let's say, when it comes to rate cuts this time around. You can still take advantage of, I think, overreactions in the marketplace to news that's on the front page because of the fact investors are emotional inherently, and so they're going to overstate some of their positions and understate maybe some of their selling and some of their buying, and so you have to take advantage of some of those conditions when they occur.
You know, here's the thing, though. This has been an emotionally driven market all year long, more so than any I've seen in a long time. And trying to go against it has been a losing proposition, right? If you say, oh, well, the crowds are chasing the Mag 7. If you would have shorted them, you lost your shirt big time. So do you join? Do you just take advantage by joining with the crowd and understanding, hey, I'm not going to drink the Kool-Aid, but I want to ride the wave? Or do you just wait for a particular time when something is either overbought or oversold and make your move?
Yeah, well, what we do for our clients is a little bit of both. I mean, we definitely join the crowds because, Charles, we could be in the third, fourth, or fifth inning of the ball game, and certainly drinking the Kool-Aid is one of those things. But when people are bathing in the Kool-Aid, when they're using the Kool-Aid to take showers with, when it comes to like everybody's topic of say discussion is the Mag 7 is the hot topic that everybody's talking about. That tells you that we're probably getting to the point where it's too easy. There's just not that easy of a game when it comes to the long-term investing of the marketplace to where everybody knows the answers and the best stocks out there. So when you get to that sentiment or get to that, say, euphoria, that's when we start to back off and take profits. And then, unfortunately, when that happens, you have to look at stocks, as I'm kind of looking at today, that are really downtrodden, downbeat, and names that I never thought I'd want to own, but ones that you have to own, to your point, because they're so beat up.
Richmond Fed came out today, another disaster, and I mean, that's been a series of disasters, but you believe the Fed's been sort of keeping an even keel on all of this. There's going to be a moment, though, where Jay Powell and company are going to have to make a decision, right? I mean, putting it off. What would you like to see in terms of rate cuts this year?
Zero. I'll tell you why. Because the Fed needs to just get off the front page, as they kind of are, because other things are replacing them, as you noted earlier. But, Charles, if you look at the market and look at when stocks do best, when bonds do best, it's when the Fed is out of the game, my man. And so as the Fed is just doing their work behind the scenes, if they're not coming out and saying, hey, we're going to cut, we're going to hike, we're going to cut. If you look back in history, when they're just kind of behind the scenes, taking care of things, watching the banks, watching money market flows and things like that, watching debt, those are areas where the marketplace can perform the best. And so the fact that the Fed, I think, has done a really good job of kind of, say, quelling that notion for rate cuts, but also saying, hey, we're keeping our eye on the data. Right. That allows them to kind of hang out kind of in the third or fourth page, say, and just still be out there if there is a problem. But certainly as far as the market goes, I think we're hinging too much on a rate cut here by the end of the year, and that could be something that disappoints us going forward.
Only 20 seconds, Scott. You're a pro. Just share with us those names. You talk about these quality names that are oversold.
Yeah, I don't know if I'd call these quality. I mean, they make me sick to my stomach, Charles, but my goodness, Starbucks is one name that's really gotten beat up pretty good, and it just looks really attractive here on the chart level. United Airlines, I didn't think I'd ever say this again, beat up and starting to pick up its game a little bit, and I like where United is just in kind of the overall scheme of the airlines itself. And our old favorite, Charles, we've talked about this. We've made a lot of money for our clients and for the viewers. Costco, my man, just got smacked a little bit in the last couple weeks, turning around again, and they cannot be beat. Category killer.
I just don't think I'll ever buy another airline stock. I really don't. Scott, my man, thank you very much, buddy. Let's talk again soon. Folks, is it time to...